Welcome back, everyone. Thank you, Gabriel. I think, Bonnie, this is not the most rewarding position to be right after lunch on day 2 when everyone is, tired.
Well, but that also means we can talk about anything, right?
Yeah. We can make it really open. You guys can ask all kinds of questions. So the session is, we imagine this session as talking about the difference between crypto investment, crypto trends, blockchain opportunities, and the difference there is between places like obviously Silicon Valley and Asia, and obviously just see where things are going and in which direction. Bonnie, as you've seen her on the stage a few, let's say minutes, but maybe like an hour or two ago, we talked about also investments and accelerators. Bonnie's with 500 startups. Maybe we can give a bit of a bigger background of 500 startups and obviously about you, and we can start with that.
Sure. Actually, before I do that, I want to do a little bit more interactive. I know all of you guys are busy, some of you guys looking at your phones, but I do want to know from the audience, right? How many of you guys are actually running a blockchain project? Some. And then what about who's investing in the startup space? All right, almost half and half. Interesting. So, because I always love to make the topic and subjects a little bit more relevant to you guys, because I know everybody has social media these days, and you can definitely look up what 500 does. Some of the things we have been doing a bit more is we are always looking at founders from every part of the world. So this is one thing that does set us aside from the very beginning, is we believe talents come from all corners of the world, not just Silicon Valley. But at the same time, having that visibility does sometimes help us benchmark in terms of the level of sophistication of founding teams, especially when it comes to new technology areas like blockchain. So one of the reasons why we started looking quite heavily on the blockchain angle is if you look at funds, right? We're a very typical VC fund with a 10-year horizon. And we looked at investments. We always look at, hey, what's going to come out in 4 or 5 years? So if we look at the internet today, what we see is Web 3.0 is upon us. The big pickup in terms of current innovations in the business side, we believe that the biggest growth is over, because so far all the innovation that came out was actually from infrastructure that was ready about 10 years ago, right around the last financial crisis. But moving forward, we looked at it, we said, well, there are actually 3 pillars in the Web 3.0 that we need to really pay attention on. So number one is, if you think about your internet, to date, all our interaction has been very 2D oriented. But what we believe is one pillar of it is going to be AR, VR, where it's going to change the way we interact with the internet. Number 2 is, of course, since 2016, 2017, a very hot topic as well is AI, where we believe that with the amount of data that's generated in today's world through the internet, we can make much more intelligent innate behavior from the network itself. And number 3 is where blockchain comes in, is we see that so far, if we look at all the great companies that came out of the last wave, right? The social media companies like Facebook, Instagrams, et cetera. It's all built upon the fact that current internet protocols are communication protocols. They are transient protocols. They don't have permanent records of anything. And the one thing we cannot do today beyond communication is to exchange items of value with each other directly, without traditional third-party intermediaries. And this is where we see why blockchain is very interesting for the next 10 years, is whether it can become an innate piece of the next layer of internet, where you can then do any exchange, whether it's currencies to start with, later on data and other items of value, with anyone in the world without any intermediaries or any escrow type services. So this is why we actually looked at the space as much more long-term than just the current kind of ups and downs of the secondary markets.
I think one thing that I always liked about 500 startups as well, outside of the blockchain direction that you just mentioned as well, you guys are very decentralized, for no pun intended, but you have offices around the world. You have very, I think, successful office in Mexico, I believe, in Singapore, 500 Durians, in Japan, and they're all separate funds as well. And then, in addition to that, you're also very vertical, right? You have like fintech funds, you have special healthcare funds, I believe. And do you have a blockchain fund, or you do it from the main fund right now?
We do most of our blockchain investments out of the main fund.
Okay. Okay. But are you planning to have maybe a blockchain fund in the future?
It depends on whether there's any, because we right now see no boundaries, because our funds are not, the main fund is not geographically bound. So we can invest in any companies anywhere in the world.
And you do invest not just in equity, you can invest also in straight into tokens, right?
And I think that's where sometimes the perception comes around saying, a lot of traditional VCs are very slow to the market. But if you really looked at it, it's only slow on the token side. And the reasoning is not because we don't see the interest in it, but it's because that it's very difficult for us to change some of our LPA documents to allow for token investments. Because tokens innately, at this moment, right, I think why we see a lot of talks about STOs is essentially we went through a period where you are investing things with no obligations and no liabilities. To be fair, right, we've now started to see issues coming out of some of these investments where we've seen cases where the project is getting sued because they change the existing setup for lockups without any obligations, right? Because there is no legal binding terms in the utility tokens themselves to say you cannot do this. But at the same time, of course, a lot of investors will not be happy if you change things halfway through. And
staying in Silicon Valley, there is other, and we mentioned them before, there's other funds, very famous funds, Andreessen, Sequoia, and they either have they either raised a new crypto fund. Andreessen, I believe, is $300 million. Sequoia had, I think, Matt Huang leaving and just starting his own fund, but Sequoia investing in it as well. So basically, kind of blessing the spin-off, I guess. How are they going to move in this space now? How do you see them proceeding with all these big players as well?
Well, one of the things I think I talked a little bit about early on in the session is that actually all these guys, including us, have been in the space since 2013 and 14, but mostly doing our traditional way of looking at companies, right? We want to see a business model. So the first things we ended up investing in will be companies like Coinbase, where it's very simple. It's picks and shovels where regardless whether the market's up and down, they're making money. So if you look at the cap table of some of these early companies, Coinbase, Ripple used to be actually called OpenCoin. Back in 2013, 14, when they were raising, Google Ventures went in, Andreessen Horowitz was in there, Union Square Ventures was in there. So a lot of traditional VCs were actually in there. I think the only phenomenon that's different is this rise of the tokens, where we're all learning in terms of fundraising via a new mechanism. But from the VC perspective, I almost look at it as similar to in the early days where we came out with all these simplified convertible note documents, right? Used to be, it was very difficult for companies to raise a small amount because the legal paperwork would be too costly. But then YC and us come out with documents like the SAFE, the KISS, which made basically fundraising for early young companies a lot cheaper, from tens of thousands of dollars of legal fees to a few $1,000s. And when we look at STOs and the direction these tokens are going, to us it's quite similar in the sense that the market is saying, hey, is there now a more efficient way to raise capital to allow for more companies to have access to the capital without incurring a lot of these so-called intermediary middleman costs of either legal fees or accounting fees, banking fees, et cetera.
How steep was this learning curve from a perspective of a accelerator VC, where I'm sure legal now, I mean, a lot of people made a lot of money in terms of advisory, legal advisory, which they also themselves had the steep learning curve, but how steep was that in terms of legal, obviously advisory, game theory, the incentivization, all these parts? I think you had to suddenly look at all these aspects of startups that necessarily you didn't have before.
I have to say, right, the truth is, it's very tough for us. It was tremendously challenging. In the beginning, almost every weekend, I feel like I was drowning in just research papers. Because every white paper I come across, it will be a new aspect of cryptography that I've never looked at before. So the learning curve is definitely steep, but at the same time, I think what you have to understand is it is a lot of it back to the kind of fundamentals of looking at projects too. I think one of the things that's very easy to get carried away in the beginning was there's just way too many events, and every team was throwing parties, meetups, etc. But the only time you actually get to quiet down and think through, kind of your original investment thesis, right? Why are you going into this space and looking at the tech? For us, it was very simple. Blockchain should only be doing and solving problems for what it is good at, and it's only good at one thing. It is essentially allowing mutually non-trusting parties to come together and transact with each other. So every time we would apply that to projects that come through and say, is this solution being applied to the right problem? In the beginning, I'd say 99% of the time it wasn't. They were trying to treat it as a panacea, like it would solve everything in the world.
Plus AI. Well, yeah.
Oh, the best one we've seen was there was this guy that came with a project. He says, well, the moment you listen to my project, you're going to invest. And we said, why? So apparently, he was doing an esports platform built on blockchain using AI technology.
Take my money.
Yeah, I look at him, I was like, okay, you don't look like a PhD to me. Your team doesn't look like they have the right background. I kind of just started to smile at him and start kind of moving backwards and looking for the exit at that time. So yeah, definitely when trends come around, we tend to see projects that start slapping on like the trendy words on it without.
But it's not just in defense of people that pitch to you. I think it was some of the analytics companies that they analyzed in the earning calls how often the word big data appears, and then how often the word AI appears, and then in the last 10 years, like the big data went down drastically, and AI and ML went really up. So basically, everyone is riding the wave. Corporates as well, companies like obviously big tech giants as well. Yeah. So I'm pretty sure it's.
Yeah, I think for those of you who are looking at investing, right? One of the things is the trends will always come and go. Every year there is a trend. 2016 was VR. 17 beginning was AI, and then now it's blockchain. But you just have to really remember why you were investing in a certain space and what the technology is good for. Because when we were looking at AI, I remember every team put on AI, but half of them were literally just analytics on adrenaline. Like, that was all they were doing. But they would like to explain it as AI. I think same thing in blockchain. If you look at it, number one is what I mentioned, right? What it was only good for. Number two is realizing that for blockchain, the bottom layer technology, there's still quite a bit we need to work through, not only on the scalability side, where a lot of projects, we are seeing promising test results from the test nets, but also the privacy side. Beyond currency and payments, right? Currency and payments is quite simple, the ledger, the money spent, adding, subtracting. But if you start talking about data as something of value to exchange, we've seen a lot of projects that says they're going to liberalize everybody's data so you can make money out of your own data. But one of the things you have to question is, contrary to a lot of announcements people see in the papers, blockchain is not anonymous, it's only pseudonymous. So it's actually traceable, and right now, no company would actually allow their data to be freely, they would not trust it on the public blockchain side. Until the day we can actually solve how do you have encrypted private processing of the data on-chain. Because data, the value comes not from the raw data itself, it's from what intelligence and information can you extract out of analyzing the data. And that part of the tech, for a lot of the projects in the US, we're starting to see more projects working on it, but it's still a very, very tough area to crack. And the three areas we looked at are people are generally coming at it at three different angles, right? One side, there are projects looking at hardware, how to utilize things like Intel's SGX with a trusted execution environment on chip to do the private processing. The second angle people come at it is in terms of a technology, a cryptography technology called homomorphic encryption. That part, there was a lot of talk, but based on our opinion, is full homomorphic is years away still. The third part, people come at it as something called SMPCs, right? Secure multi-party computations. That's even further out. So in essence, I mean, to solve that problem, we're looking at, when I invest in a project, is looking at the time horizon, whether it's realistic, even for a PhD team to be able to manage the breakthroughs.
Mentioned the trends that you see and then the projects you're involved. How many projects and startups? By the way, I noticed that in the crypto world it's mostly called projects, not startups for some reason. But how many do you have within your portfolio? How many startups that are using any kind of DLT or blockchain technology that doesn't have to be crypto related in terms?
Yeah. That's an interesting question. I actually started pulling out our own data because I got asked that a lot. On total right now, our tally is about 40 plus companies. These include blockchain, whether it's token or not token, everything since we've started investing in 2013. And a lot of them, I would say, in the early days, right? We got the first acquisition recently. Chain.com got acquired by Stella. So and that's been an investment for about 4 years, 3.5, 4 years. So it is essentially behaving just like any other fiat companies we've invested in. We believe it takes them time to build up the company to the point where either they can exit, get acquired, go IPO.
How many do you do token investments in?
Token is probably less than 20.
Less than 20?
Yep. And we are told, I think one of the struggles when we did the token was we were told we are so slow in evaluating the projects. But in essence, I think it was only like 2 weeks that it took us to come back with an answer. So it was actually very surprising in terms of the speed, like some of these crypto monies were coming in the beginning. And it was actually, that part was difficult for us to sometimes fight for the allocation. But luckily, what we came around with was, I remember one of the projects after our second call of due diligence, right? We had a whole page of questions we want to run through. It took us about 2 hours. And at the end, I think that founder said, "You were the only investor that ever asked us any technical questions." And I was like, how did the other people invest? That actually puzzles me a lot. I don't know.
Were they shocked or angry that you learned?
No, they were just, I think, genuinely shocked by looking at the list of questions and the amount of preparation they have to go through.
How dare you?
But for us, we said, hey, sorry, we're just a little slow, and we asked a little bit more questions.
And so you have all this. Would you want to single out some of the projects that you see? Obviously, all the ones that you invested, you think are obviously worth investing, but we all know not all of them are going to become unicorns. I know, shocking. Which ones do you think are actually very good use cases, very good projects that you might see?
I think one of the things we learned from doing so many investments is that, and I know some of you will say, oh, it's so cliche. We always talk about C investors, right? We love talking about, it's all about the people, it's all about the founders. But what is it about the founders? And I can give you an example is that most of the founders we see, a lot of the companies, when they started out with that idea, the reason why we love founders is number one, right, for crypto. And I tell this to some people, I said, when we even started token investments, we are not 100% sure if utility tokens will be the surviving mechanism of fundraising for these companies. But what I need to be sure is, since nobody knows what the future is, I want to find people who have a level of integrity. And what I mean is that we have had projects before where the founders may have, folded a company, or they, for whatever reasons, it's not, their abilities that's lacking, but it's macro environment, whatever. But if you invest in the right people, what they looked at is, if they see you as an investor that truly help them. We've had founding teams where came back to us a second time when they had a new company, and they literally would say, hey, I feel really bad. Here's some shares. We want to make sure you're giving back. So to me, these are the teams, we've invested in a team called Solana, Seller, Hypernetwork. All of them, when I look at the teams, I said, these are the guys where I trust working with, and we would wholeheartedly help them. But at the same time, we're also always sharing information with them, right? In terms of, hey, if the environment changes, what are they going to do with investors? And then also, not only to our benefit, right? I actually would tell them, hey, do keep in touch with your investors, because number one is you're already seeing the market. A lot of teams have miscalculated how much money they have in the bank after raising the token. And the token is a one-time thing, supposedly. However, I said, if you keep in touch with your key investors, you will always have leeway in the future to renegotiate if the market completely changed, right? Because at the end of the day, believe in you. We don't want you to die. We want your company to be successful. So a lot of this is, I say, why we want to always talk about the person is so important is that we looked at these investments as like we're investing in serial entrepreneurs. We're investing in entrepreneurs who are not only going to build one company, but they're going to build the second one, the third one. And we want to be there.
And you want to get the early phone
Exactly.
call.
We want to be the person they call when they sold their unicorn and built the second one. They say, hey, we've got allocations from you if you want to come in. And that would be the best scenario.
When you invest in tokens, are you exclusive or do you make any conditions with the potential portfolio company? And second question, do you care if it's utility or security, which now seems to be a little bit of a shift?
Well, there's really, to us, so far the tokens have all been claimed utility, right? There is no regulations about securities. I think a lot of people ask us about what our view is on security tokens. And my personal view is that security tokens is a mechanism for replacing, is really in the old days, pink sheet companies, penny stocks. A simpler, less costly way that's regulated for smaller companies to have access to public capital pools. They don't have to be token companies. They don't have to be blockchain companies. Point taken is I just came back from a trip in Taipei, and we talked about what security tokens can be helpful in the traditional finance market. And in that situation, right, for Taiwan, is that there are actually a lot of small, medium companies, profitable, not big enough to go to IPO. They have some innate issues about succession planning. Second generation doesn't want to take over. But to a lot of outside investors, these are actually great investment opportunities.
Refinancing.
Exactly. But can STOs become a tool set? And our conclusion is, yes, it can. But the issue is whoever's the startup company needs to be the one hand-holding the government to set up sensible regulations for KYC for approvals. Because you can't go through the old way, right? Innovation in the STO area would come in things where can you be creative about solving the government's concerns of listing young, smaller sized companies with technology today. What I mean is, in the old days, there used to be a stack of paperwork you have to go through. But come on, today, I look at all of you. Everyone's taking videos. Everyone's shooting high resolution pictures, right?
We see it.
Memory is very cheap, and storage is cheap. So why can't there be now new KYC and new mechanisms instead of paperwork? There are cameras in these companies. Can authorities have 24-hour random access to check that the companies actually have employees in there? Can they have motion sensors to test that if the company has no movement for like 5 days, that's going to be a red flag alert, right? So a lot of these things, we don't see it yet in the regulatory side of who's the company going to be successful in that. And those, from the STO side, I think those will be the only investments we're interested in, but not the part, as a VC, not the part about just, fractional ownership of real estates, et cetera.
And then time is flying, but quickly, Asia. That's the other topic of our talk here. You are based basically between Asia and Silicon Valley, Hong Kong and San Francisco. What is happening in Asia? We talked about this yesterday a bit. Crypto obviously exploded in Asia on many different levels at different times, but what's happening in Hong Kong, what's happening overall? Southeast Asia, after all, we are in Thailand. In terms of projects and overall crypto scene trading and so forth.
I think first observation is that we definitely move very fast here and break a lot of things. So in Asia, I see characteristics where generally you can talk about is, of course, number one is in the US, you see a lot more of these infrastructure, longer term projects where they're really trying to build out the piping of the next wave of internet. But here, I would say, if you talk about Hong Kong, a lot of people, I still spend half my time in Hong Kong, a lot of people say, hey, there's no blockchain companies in Hong Kong. And I said, no, there are actually a lot, except the fact that they're all making so much money that not many of them are raising. They actually don't go to a lot of the shows. But at the same time, it's because Hong Kong, by nature, is a financial market. So we actually had a lot of ex-traders coming out in the early days and started, a lot of market-making companies, a lot of trading companies, quant trading. So that's the characteristic of what I observed in Hong Kong. In Southeast Asia and in other parts of Asia, what we've seen is not only a lot of our current portfolio companies, but different industry players, like very namely supply chain, trade financing, also in gaming and in banking, right? A lot of the industry players are actually taking initiatives. It's just that not many of them announce it. I have to go back to, I love, like, every time, that's why I do still love to travel, is every time you go to a new place. Like in Taiwan, I learned that actually quite a few of the largest banks, they're all doing multiple projects in blockchain, both using their consortium type of permission chains, say R3 Quarter, plus dabbling into the permissionless world, which we see is a very healthy kind of transition. And this is the piece where, as an investor that has the ability to see across regions, well, we're trying to help a lot of the projects bridge the gap, because we see that on one side, the tech teams are too focused on just building out, heads down, building out the infrastructure. They're not taking enough time to understand enterprise sales takes time. It takes at least a year to warm up to, the big banks, the supply chain players, to get in the door to explain what the technology is going to do. So we're helping them mostly to find these opportunities and get them into where we see a lot more activity in Asia, mostly because not only are we moving a lot faster, but we've always had a very commercialized mind, I would say. And then also plus, at the same time, I think people don't understand, it's like government assistance and support actually makes a huge difference. I mean, a lot of people talk about why Silicon Valley is Silicon Valley. It was because of a lot of military spending, right? One of the interesting articles, I don't know if you guys saw, is I think US is finally trying to catch up on that side, is DARPA, the Defense Advanced Projects Agency. They've actually just issued an RFI, request for information, for a blockchain workshop, and requesting teams who are knowledgeable in 3 specific areas, right? And I think this is why we remain very bullish on blockchain. It's number 1 area, they're very specific about, they want information on large-scale distributed permissionless consensus protocols. So clearly, they want to know what is it about the public chain and about the new consensus protocols that's going to make a difference in terms of even military networks. Number 2 is they're very focused on wanting to know about economic models that drive the security of these networks. And then number 3 is also they want to look at companies who understand how to analyze the centralization or the accidental centralization of these distributed networks, to understand how to mitigate it. Because I think they obviously see some of the topics that are going through is even with a permissionless chain, how do you understand that you can keep it as distributed and decentralized as possible to defend against attacks? So with that point, I think that's why we looked at it as that long term, we're still bullish on the market, even though short term, I think there's a lot of chatter going on. And whether we call it the Gartner cycle of like valley of death or valley of disillusionment, from a timescale perspective, if you look at a 10-year fund, this is just a blip in the journey there.
Yeah, watch DARPA videos on YouTube. They're pretty awesome when they have this prediction of future technologies. It's kind of science fiction in a way.
Yeah.
But it's interesting, the permissionless part, because I think it's, I recently saw the regulation coming, suggests the regulation for China, which kind of goes in the opposite direction. We're going to focus on permissioned blockchains more on that side. And speaking of that, we're really running out of time. The regulatory part, you mentioned the government involvement in Asia, and we had the regulatory panel before that was very insightful in terms of Thailand and Southeast Asia and Asia. What is your perspective of what's happening here in Asia in terms of to facilitate investments for VCs like 500 startups?
I think it's starting to us, it's starting to diverge, right? One side of it is more of blockchain becoming, being investigated as a tool for asset management and securitization of assets. To us, that's a little bit less, as I spoke earlier, right, as STOs, less interesting to VCs. But where we focus more on is actually the to-be application of some of the permissionless scenarios, meaning I've repeatedly said this because it's truly an area I'm looking at a lot lately, is trade financing. Because the industry is it's perfect scenario, right? Typically, supply chains in Asia, 70–80% are small, medium players. They have a lot of issue obtaining cash flow financing. And it is because information flow is because it's very difficult to understand who you're sending this money to, and for banks to validate them and vet them. So to us, this payment across the supply chain is actually a perfect use case for permissionless blockchains right now. And then the other side is a little bit less talked about is gaming. We're also very bullish on. But gaming, not so much about the cute little crypto kitty side, but about existing game development platforms, leveraging blockchain as a part of the solution to, number one, enhance the revenue coming in through for game developers, and number two, also naturally enhancing the entire life experience of gamers, cross games.
All right, we're over our time again. We're going to play a little game now. I didn't tell you about it. To be a full disclosure, I completely stole this idea from CB Insights, who are one of our partners and organize, and they're really good in data collecting and presentations and so on. But at their event in New York last June, they have this game called Underrated, Overrated. So I'm going to read a few terms and concepts to you, and you can just reply with underrated or overrated.
Okay, easy enough.
Easy enough. AI.
Underrated.
Okay. ICOs.
Overrated.
STOs.
Overrated.
Singaporean fintech ecosystem.
No comment.
Okay, Hong Kong fintech ecosystem.
Underrated.
Interesting. China payments.
Underrated.
Definitely, agree. Localization in Asia for foreign startups or Silicon Valley companies.
Underrated.
Consideration of game theory and mechanism design in building a startup and blockchain startup.
Extremely underrated.
Government involvement in building an ecosystem, startup ecosystem.
Underrated.
Interesting. Blockchain technology.
Definitely underrated.
Okay, well done. That was it for today. I think we have to get off the stage. Thank you very much, Bonnie, for being with us in this chat. Yeah, if you want to talk to Bonnie, you're going to find her around for the rest of the event. Thank you.